Identifying trend. The trend is the general direction that a market is moving over time. Understanding what the current trend is, and if that trend is changing, can help you participate in the market in an informed way. Trend lines. The easiest way to identify a trend is to simply look at the chart. Using a trend line, you can connect data points to get a sense of what a trend looks like now and where it could possibly go if the trend continues. In an uptrend, connecting pivot lows help to identify a support line. When broken, the support line indicates a possibility that the trend is changing. In a downtrend, connecting pivot highs identify resistance. A break above this line could indicate that the downtrend could be reversing. Moving averages. The most common indicator in technical analysis is the moving average. The moving average smooths the data such that an overall trend is easy to see, especially in markets where there is a lot of chop or churn. The moving average achieves this by taking an average of the latest n periods on the chart. It is considered moving because as a new data point is tallied, the oldest data point falls out of the calculation. The moving average can be used in several ways: identifying trend as support and resistance, and to identify trend change. The moving average shows what the overall trend is when it may be difficult to discern just by looking at price. Price crossing through a moving average can indicate that a trend is changing. When price crosses above a moving average, that is bullish indication. Price crossing below is a bearish indication. You can also use the crossing of two moving averages to identify trend change. When the shorter-term moving average crosses above the longer-term, a bullish trend is possible. A bearish trend is indicated by a shorter-term crossing below the longer-term moving average.